ultimate guide for beginners to help you get started with Robo-Advisors specializing in socially responsible investing, SRI, in 2024. Step 1. Understand what SRI is. Socially responsible investing, SRI, is an investment strategy that considers the environmental, social, and governance (ESG) factors of a company when making investment decisions. SRI investors aim to align their investments with their values and promote positive change. Step 2. Learn about ESG factors. ESG factors are the criteria used to evaluate a company's sustainability and impact on society and the environment. These factors include environmental, climate change, pollution, and natural resource management; social, labor practices, human rights, and community engagement; governance, corporate governance, board composition, and executive compensation. Step 3. Research SRI Robo-Advisors. Look for robo-advisors that offer SRI investment options. Some popular SRI robo-advisors include Schwab Intelligent Portfolios, Fidelity Go, Vanguard Personal Advisor Services, Betterment, Wealthfront, Personal Capital. Step 4. Evaluate SRI criteria. When selecting an SRI robo-advisors, evaluate the criteria used to screen for SRI companies. Look for criteria such as ESG ratings from reputable third-party providers, exclusion of companies involved in controversial activities, e.g., tobacco, weapons, inclusion of companies that prioritize sustainability and social responsibility. Step 5. Choose an SRI robo-advisor. Based on your research, choose an SRI robo-advisor that aligns with your values and investment goals. Consider factors such as fees and minimum investment requirements, investment options, e.g., ETFs, mutual funds, portfolio management approach. Step 6. Set up your account. Once you've chosen an SRI robo-advisor, set up your account by providing basic information such as name and contact information, social security number or tax identification number, funding source, e.g., bank transfer, wire transfer. Step 7. Fund your account. Fund your account by transferring money from your bank or other financial institution. Step 8. Choose your investment portfolio. Select an SRI investment portfolio that aligns with your risk tolerance and investment goals. Some SRI robo-advisors offer pre-built portfolios, while others allow you to customize your portfolio. Step 9. Monitor and adjust your portfolio. Regularly monitor your portfolio's performance and adjust it as needed to ensure it remains aligned with your values and investment goals. Step 10. Review and update your SRI criteria. As new information becomes available, review and update your SRI criteria to ensure it remains aligned with your values and priorities. Additional tips. Start with a low-cost index fund or ETF as a core holding in your portfolio. Consider diversifying your portfolio by sector or geographic region. Use tax loss harvesting to minimize taxes on your investments. Regularly review and rebalance your portfolio to ensure it remains aligned with your goals. By following these steps, you can get started with SRI robo-advisors and invest in a way that aligns with your values and promotes positive change.